Do you want to buy a dividend stock that has been growing its dividend for the past 54 years? Do you want to own the same stock that has given double-digit percentage raises every single year? And do you want to buy a dividend stock that is 65% below its all-time highs? Then you have to stay tuned and watch this video. What's going on, everybody? This is Phil from Millennial Money Gains, and welcome back to a brand new video. In today's video, I want to talk about a stock that is currently in my own dividend portfolio, and a stock that I have come across that seems to be at a pretty decent value at these current prices. So if you guys are hyped for this video, please make sure you smash that like button, and let's get on with it. So the company that we are talking about today is Target Corporation. Ticker symbol is TGT. Target Corporation is currently sitting at $166 per share, and it is down about almost 26% this year alone. In the past 6 months, Target is up about 1.5%, and in the past month, Target is down about 6.5%. So, for those of you who don't know what Target is, they engage in the operation and ownership of general merchandise stores. It offers food assortments, including perishables, dry grocery, dairy, and frozen items. The company was founded by George Draper Dayton in 1902 and is headquartered in Minneapolis, Minnesota. Target currently has a market cap of $76.39 billion. And let's hop over right to their dividend, because that is why I invest in them. Just for full disclosure, I have 10 plus shares in my dividend portfolio. And Target has a dividend yield of 2.6% at these current prices. They have an forward annual payout of $4.32 per share. They have a payout ratio of 65.89%, so pretty good there, and plenty of room to grow the dividend. Their 5-year dividend growth rate is sitting at 10.97%, which is, when was the last time you received an 11% raise at your job every single year? And they have been growing this dividend for the past 54 years. They currently pay a dividend of $1.08, and they do pay a quarterly dividend. So let's hop over to dividend growth for Seeking Alpha and see what they rate it. So Seeking Alpha gives Target a relative grade for their 1-year dividend growth rate of a B for 25.32%, compared to the sector median of 16.67%, which is about 52% more. Target's 5-year average is about 8.54% dividend raise, so they are way above that average as well. Let's hop over to dividend safety and see what Seeking Alpha gives Target. So they give Target, they don't have a grade here for Target for dividend safety, but their cash dividend payout sector median is about 35%, and Target's 5-year average is about 54.87%. And let's hop over to the financial section for Target and take a look at their income. So as you can see here, they have had steady income since 2019. Very steady, which is awesome to see. Let's hop over to their balance sheet. So they have about $2.2 billion in cash and cash equivalents at the moment. They have a total assets of about $53.3 billion and total liabilities of about $19.5 billion. And let's take a look at their total shares. So we want to make sure those shares are decreasing, and it looks like they are. So they are buying back some shares, which is awesome to see. When the company buys back their own shares, each shareholder's value goes up a little bit because they are becoming less diluted, and your share is worth a lot more every single time they buy back a share. So the cash per share was growing steadily, and as you can see, we have this big drop off from January of 2022 to January of 2023, and that could be the reason that we see a decrease in price for Target. Let's go over to their cash flow, because this is what will be paying that lovely, lovely dividend. So the net income was generally increasing and has kind of cut off since from January 2023, from January 2022. This can be from pandemic. A lot of people were rushing out. Target was a big player during the pandemic, and they saw a lot of gains during that pandemic. Let's go over to the valuation page and see what Seeking Alpha gives Target. So they give Target a relative sector grade of about D- for a PE ratio of about 27.61, and it's about 127% more than the sector median, and Target's own 5-year average of 18.06, which is about 52.9% higher. Their forward PE ratio is sitting at about 19.35, which is about 5% higher than their 5-year average. So personally for me, if you want to keep this one on your radar, I have this one in my personal stock portfolio, and we will put a screenshot of it on the screen here just to show you my position in it completely. So I do own about 10.07 shares of Target. My average cost is sitting around $150.75. I am up about 10% on the position, which is $153.63, and it is about 5.76% of my portfolio. So for me, right now, this price is a little bit out of range for buying. I would love to see this price come back down to the 150 range, and that is where I will buy more. I think you can find a lot of value in today's market, but I did just want to keep Target on your radar, because even at these prices and this amount of dividend growth that you are going to be receiving with Target, it is a decent buy. And I think you can do a lot worse in today's market. If we go look year to date, they are up about 9.4%. So their 52-week low is sitting at $137.16, and their 52-week high is $254.87. So they are a bit off of that 52-week high, about 65% off from that 52-week high, and they are a little bit higher than that 52-week low. So this could be a good buying range for me. I think I would like to see the price come down a little bit. Let me know what you guys think about Target. And let's just go over to their earnings real quick, because they did have some killer earnings for Q4 of 2022. So let's check that out with their press release here and take a look at their earnings. So comparable sales increased 0.7% on top of 8.9% in Q4 of 2021, driven entirely by an increase in guest traffic. Let's take a look at their full year 2022 highlights. Total revenue grew $3 billion to $109 billion from $106 billion in 2021. Total revenue has grown more than $30 billion since 2019. Comparable sales grew 2.2% on top of 12.7% in 2021. Comparable traffic grew 2.1% on top of 12.3% on 2021. All 5 core merchandise categories delivered unit share growth on top of strong share performance over the past several years. The company reported fourth quarter GAAP earnings per share of $1.89 compared with $3.21 in 2021 and $5.98 for full year in 2022 compared with $14.10 in 2021. Adjusted earnings per share was $1.89 for the fourth quarter compared with $3.19 in 2021 and $6.02 for the full year. Compared with $13.56 for the full year compared in 2021. So the CEO said, "We're pleased that our business delivered comparable sales growth in the fourth quarter in what continues to be a very challenging environment. Strength in food and beverage, beauty and household essentials offset ongoing softness in discretionary categories. This performance highlights the benefit of our multi-category merchandise assortment, which drives relevance with our guests in any environment and is a key reason we grew traffic every quarter last year. Looking ahead, we're focused on executing our long-term strategy, including continual differentiation through affordability, assortment, ease, and convenience. At the same time, we're planning our business cautiously in the near term to ensure we remain agile and responsive to the current operating environment. We're pleased that we entered the year in a very healthy inventory position, reflecting our conservative approach in discretionary categories and our commitment to reliability in our frequency businesses. As we plan for the year ahead, we will continue to make robust capital investments and pursue efficiency opportunities in support of our long-term growth. We're proud of the loyalty and trust we've built in our guests and want to thank our team for their ongoing commitment, delivering a truly exceptional and differentiated retail experience. And they go on to give some guidance for the first quarter in 2023. The company expects comparable sales in a wide range from a low single-digit decline to a low single-digit increase and an operating income margin rate of 4 to 5%. First quarter GAAP, EPS, and adjusted earnings per share are both expected to range from $1.50 to $1.90. For the full year, the company expects comparable sales in a wide range from a low single-digit decline to a low single-digit increase. Operating income is expected to grow more than $1 billion. And GAAP, EPS, and adjusted earnings per share are both expected to range from $7.75 to $8.75. So their guidance in their earnings call was a little bit weak, which is why the stock did not go up as much as it should from their earnings that they reported. But overall, I do think Target is a decent buy right now and a decent one to hold on your watch list. Let me know down what you think in the comments below. I'd really like to know who holds Target, who holds anything with Target, who has held it in the past, who wants to hold it in the future, whatever you have to do with Target. Let me know down in the comments. I appreciate you all for watching. Make sure you smash that like button, and I'll see you in the next video. Peace.